Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. As I've been talking about in a number of speeches I've given at different banking organizations across the country, a big concern in here is the industry and its earnings. When we look at overall ROAs in here, well below that 1% type mark, that I think has been the traditional hallmark of where community banks have been in terms of the strength in their earnings, not even at those kind of levels, more like at about a 0.85%. Concern. As an industry overall, that would indicate that there's high-performing banks well over 1%, but when you look at the industry having gone through the financial crisis, the Great Recession, is we still have not returned to that 1% and higher profitability the banks need to essentially get their return on equities up in here. That right now return on equities just sitting approximately at about a 7% return on equity. Banks have built up capital in here in anticipation of what could have happened with Basel III, which of course has the impact on the ROE along with ROAs. But now I really feel that the industry needs to focus. We've brought up certain things like the strategic initiative on net overhead, which we have up on our website. Also to look at the McGoffin method we have in the website in order to increase non-interest income and decrease non-interest expense. And I urge every community bank to look at that, to complete those questionnaires, to essentially determine whether or not there's areas which we can lift those ROAs up. Along with that is that what has happened is that the tax rate for community banks overall, not quite up to the 34% level that we saw before the financial crisis because of the level of ROAs, but still we've moved our way up and it's been pretty much going right around that 30% type rate on overall effective tax rate. So when we look at that, is that banks are not tax efficient. You've heard me say this many times, but I think that if you sit there and say we want to have over 10% ROEs, that you have to be tax efficient. You have to be net overhead efficient, and that is the future of community banking. So when we look at that, is that we recommend really setting a 3-year tax strategy in terms of getting yourself down to that tax efficient level. So in a tax strategy, part of the strategic planning process, that overall what we can do is to move down to what your individual tax efficiency should be. And that is where you sit between the AMT and the regular tax. So when you look at that, is that what number is that? Your accountants can give that number to you very exactly on a quarter-by-quarter basis. We then put in the tax strategy. What do we look at as a tax strategy? Well, as I've been talking about, you want to maximize your BOLI in here to that full 25% of equity. The other aspect is looking at tax-exempt loans and developing a book of tax-exempt loans, which help your local franchise, your local communities, but is an excellent way to develop also core deposit relationships with them, is by going after the type of lending that you can develop with different tax-exempt entities. And finally, the tax-exempt securities in here, which still in my mind are very cheap in terms of overall yields compared to other securities that community banks buy. And people concerned, well, we need to be able to analyze whether these securities are investment grade. Well, S&B does thousands of municipal bond ratings a year for community banks. We have the ability to determine here if a security is investment grade. We look at it from the standpoint also, is the price on that tax exempt that you're purchasing consistent with other tax exempt securities. We can give you that report for the pre-purchase due diligence, and we can also then on an ongoing basis give you your post-purchase due diligence on the tax exempt portfolio. But the key here is that we really have to slice community bank profitability in a number of different ways and sharpen our pencil to get those return on assets up to levels that are once again providing us with the high levels of return on equity. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.